Ever wondered how money flows through different channels in India's economy? Let's dive into the fascinating world of the Indian financial system. This system is the backbone of India's economy, acting as the conduit for the flow of funds from the areas where they are in surplus to the areas where they are in deficit. The Indian financial system has two main pillars: banks and non-banking financial institutions, or NBFIs for short. On one hand, we have banks, institutions that we're all familiar with, accepting demand deposits and issuing checks. Banks could be commercial, cooperative, regional, rural, or payment banks, each playing a unique role in the economy. On the other hand, we have non-banking financial institutions. These entities, although they don't accept demand deposits or issue checks, play a critical role in the financial system. They include all India financial institutions, non-banking financial companies, primary dealers, and credit information companies. Understanding these two components will help us understand how money is managed in India. So, let's delve deeper and unravel the complexities of this system together. Banks, the lifeblood of any economy. But how do they function in India? Let's begin with commercial banks, categorized into scheduled and non-scheduled types. Scheduled banks are those listed in the second schedule of the Reserve Bank of India Act of 1934. They operate based on the principles of profit, accepting demand deposits and issuing checks. Next, we have cooperative banks. Unlike commercial banks, these operate on cooperative principles. They are further divided into urban cooperative banks and rural cooperative banks, each catering to the needs of their respective areas. Regional rural banks, or RRBs, hold a special place in India's banking system. Established to boost the rural economy, they play a significant role in promoting financial inclusion. Then there are payment banks. These banks, established in 2015, primarily serve the underprivileged and poor. However, they don't lend money or issue credit cards. Their main function is to accept deposits and provide remittance services. Local area banks, on the other hand, were set up to mobilize rural savings for local investments. They operate in a limited area and strive to bridge the gap between organized banking and rural borrowers. So these banks play a crucial role in managing and circulating money in the economy, but they aren't the only players. Apart from banks, there are other institutions that facilitate the flow of money. Enter the non-banking financial institutions. Let's dive into the world of non-banking financial institutions, or NBFIs, a key player in the Indian financial system. Unlike banks, NBFIs do not accept demand deposits or issue checks. Instead, they provide a variety of financial services and products that complement what the banks offer. Among these NBFIs, we find All India Financial Institutions. These are apex-level institutions that play a pivotal role in the growth and development of sectors that are of national importance. They provide financial assistance, both in rupees and foreign currencies, for greenfield projects, as well as for expansion, modernization, and diversification of existing projects. Next, we have non-banking financial companies. These are institutions that provide banking services without meeting the legal definition of a bank. They play an important role in promoting inclusive growth of the country by serving diverse financial needs of various sectors. Then we have the primary dealers. These are entities that trade in government securities. They help in the issuance and distribution of government securities and also provide a market for these securities. Last but certainly not least are credit information companies. These companies collect and maintain records of individuals and commercial entities' payments pertaining to loans and credit cards. These records are used by banks and other financial institutions to assess creditworthiness of a potential borrower. NBFIs, though not banks, have a significant impact on India's financial landscape. So, we've traversed through the complex web of the Indian financial system. We've explored the pivotal role of banks, from accepting demand deposits and issuing checks to mobilizing rural savings for local investments. we've delved into the nuances of the different types of banks, from commercial banks, both scheduled and non-scheduled, to cooperative banks with their unique operation principles. We have also touched upon the specialized regional rural banks, payment banks, and local area banks, each serving a distinct purpose in the financial ecosystem. Shifting gears, we've also unearthed the significant role of non-banking financial institutions. We've learned about the variety of NBFIs, from all India financial institutions and non-banking financial companies to primary dealers and credit information companies. We've seen how institutions like NABARD, NHB, and Exim Bank provide crucial support to rural development, housing finance, and exporters and importers respectively. And that, my friends, is a glimpse into the intricate workings of the Indian financial system. Until next time, keep learning.